Over the weekend, we've been seeing some movement in the altcoins finally, and now everyone's asking the same question. Is this it? Is this finally the start of alt season? Bitcoin's been holding fairly steady, which is actually a good sign. Every time it consolidates near the highs like this, it gives altcoins a chance to run, and that's exactly what we are watching happen this weekend so far. But before you start aping into every chart that looks green, we need to ask, is this a real shift in the market, or are we being set up for disappointment yet again, just like every other time alts have started to take off this cycle? In today's video, I'm going to break down the Bitcoin price action from last week and what's happening right now, and go over the shift we're seeing in the dominance metrics to show you exactly what happened the last time we saw this exact same setup. Now, back then, some alts ended in pain and others maintained structure. So my goal today is to show you how to avoid becoming, as a trader or investor, left in pain yet again. We're going to go through historical examples, highlight which coins ran last time and which ones actually held their gains, and I'll also show you what I'm watching now to know if this move is real or if it's just another trap. But first, you know what to do, guys. I'm on a mission to get to 60k subs. I am literally so close. It's my next goal. So if you enjoy this channel's content and haven't yet subscribed, please do so and hit the like so that YouTube shows this video to more people who need to see it. Now, let's start with Bitcoin. I'm on the 4-hour time frame here, and we can see that we did get our expected level 3 rise. We've been speaking about that on this channel for quite some time, and this week gave us exactly what we were hoping for. Our W formation, which was our entry signal into the consolidation, our rise 2, another consolidation, and then our rise 3. And that's taken us up to, it smashed through my first liquidity zone, and this one here is the next one, which is sitting between about 105 to say about 107k. When we zoom in closer on the small time frames for Bitcoin, we can also see that we had our 3-level rise within the week as well. So the week opened just as it should. We had our false move to the downside to stop out any weekend traders, created our W formation off the low of the week there, and then that led to our 3 rises for the week, where we ended up going back into consolidation into the new weekend trap for the current weekend. We've taken out a bit of liquidity that's above price over this weekend as well. So these levels here are what I had marked prior to the weekend so that I can get an idea of which way I think the false move might go. And so this one here has been taken out on that spike high there, and so has this one actually. So we do still have 165 million sitting at 105,250, and then there are levels higher up as well, all the way up to the all-time high at about 107. The price is consolidating above the 50 EMA, whilst that 50 EMA is still trending up to the right. So that's a bullish sign. So whilst we are above this 50 EMA, I'm going to remain bullish, but I am waiting and making sure that we do continue to create higher highs and higher lows. I just want to see price get out of this consolidation, and if it does break through, I'm going to expect that it's going to come for this higher liquidity next. Now, that could happen as a part of the false move week beginning. So if we do move up into these levels and we take out that liquidity, that's where you're going to need to reassess on smaller time frames to see if the false move was an attempt to take that out, and then maybe something like that happens when we get a trend change. Now, if we go to trend change, we might then end up coming down for some of these lower liquidity levels. They're at about 102 and about 99, say 100k even. That would take a few days to play out if something like that happened, and I would consider that to be a healthy pullback. It would not bother me at all, especially because it would line up around the 1 hour 200 EMA. So if you're not in a long position and something like this does happen, that could be an area to get the next long position. However, it does depend on the movement at the time. So if this turns out to be a sharp liquidation down like that, that's a worry. But if it trends down slowly like this, I would be looking to buy dips on a move like that. Now, because Bitcoin has consolidated at the high all weekend, that is what's given the altcoins room to run. That's what I mentioned earlier. And that's why we're seeing some pretty good movement in altcoins this weekend. Also, when we look at the dominances, we can see why altcoins are running. So Bitcoin dominance has rejected at about 65%, and it's starting to head down. It's broken the 50 50 EMA at this point in time. At the same time as that happening, we have seen the USDT dominance, well, I should say stablecoin dominance, because this chart is USDT and USDC, but we've seen the stablecoin dominance head down as well, and we're seeing the total minus stablecoins moving up out of my initial area of interest. So the combination of these three charts is showing you that we have a money shift at this point in time. We're moving out of Bitcoin and out of stables, and we're moving into altcoins. It's a good sign. And this would explain why we've seen altcoins moving over this weekend. So this looks like a really good setup for alt season, but we have to make sure that we're not being set up for a trap, especially because the moves that we're seeing are happening on a weekend. Weekend tends to be low volume. It doesn't tend to be driven by the large money. It's very much retail driven. And so therefore we have to be cautious, and we need to know what to look out for when the new week opens. And we also need to know what to look out for a bit more longer term to know if this is going to be a sustainable move to the upside or if it's short term. So let's go back and have a look at what happened the last time we saw the Bitcoin dominance drop. Coming back to this move down here where Bitcoin dominance initially rejected at about 61%. Now this happened in early November, and this move to the downside lasted until early December. We can see at the same time that the Bitcoin dominance was dropping through here, we also had the USDT dominance drop too, similar to what we're seeing now. And then once those two got going, we then saw the total start to move out into the upside. Also note that that topped out around the first week of December as well, when the Bitcoin dominance as well as the USDT dominance both found their bottom. So let's take a look at what altcoins did around this time. And I'm going to use Solana as the example. So this was the period of time here where we saw that shift, and we can see that Solana did about 67%. So what this is showing us is that when we did have that spike, we did have a mini alt season, which is what I've been saying a lot on this channel for this whole cycle, that we're not having the one big full-blown alt season that we're all used to, but we are having mini alt seasons along the way that last a few weeks at a time. And we can see that when we have a look at this altcoin season meter, where the best way to use this is not to wait till you actually get into the peak, because that means we're well and truly in it. We want to see when we shift out of Bitcoin season. And you can see here that we shifted out and retested in early November. And that took us to our major spike that eventually did get us up to 88 in the altcoin season range. But what we want to be aware of so that we can anticipate things like this happening is what happened prior to that. So prior to November, you can see that we stayed in this Bitcoin range from around late July until early September. Then we broke out and retested the range, created the higher low essentially of this chart, and then we got the breakout. So when you have a look at this part here where we stayed underneath in the Bitcoin range for a few months, it's very similar to what is happening right now. And we've just seen the breakout of the range. Could this part here be the beginning of the setup that ends up looking exactly like this? It's very possible at this point in time. When we go back to the Solana chart, this is that whole break and retest region before it actually ended up breaking out. And then after Solana actually peaked, this right here was when we got into this 88. So actually the best way to use this chart is to buy on the retest of the Bitcoin season and actually sell when it gets into altcoin season. That seems to be the play for this cycle. So let's have a look at what some other altcoins did during that period of time. Ethereum did 70%. XRP did a whopping 463%. Cardano did 305%. Curve did 480%. Doge did 233%. HBAR did 750%. One of our favorite coins on this channel. Let's have a look at 𝗟𝗶𝗃𝗏. 𝗟𝗃 did 130%. TON did 57%, and Grass did 165%. Now that's just a few examples, but what happened after that run is what's important, and it will help you in deciding what to do now if in fact we're about to start another mini alt season. Let's go through the aftermath of the very same coins. Starting with Grass, for example, you can see here that after that run, it actually came back to create a lower low. Ethereum also massively suffered with another lower low after that 1 month breakout. Solana was a similar story, a big favorite for a lot of people, but look, this was where the breakout happened and it ended up coming back to create a lower low. 𝗟𝗏, similar story, 30-day breakout, came back to create another lower low. And TON, also the same story, 1 month move to the upside, came back to create another lower low. However, it's not all bad. If we have a look at Doge, for example, it came back, but it came back to create basically an equal low. And then if we go and have a look at XRP, it held up really well, actually. It had a huge move to the upside. And ever since then, it's really just been consolidating, had a brief moment below the daily 200 EMA, but at this point in time, it's reclaimed it. That's the sign of a strong coin. Let's take a look at Cardano. Very similar story as well. Had its huge breakout and basically has been consolidating down back to test the 800 EMA, which has acted as a support so far, and that support has created a higher low. Curve is also a similar story, a very strong coin where it had its big move to the upside, had its retracement, but that retracement settled and also created a higher low. And finally, HBAR, same thing, had its big move to the upside, created a double top here, consolidated back down, tested the 800 EMA, and that test also created a higher low. Now, a quick pause. If you're trading these altcoin setups, BingX is a great platform where you can trade both futures and spot. If you use my exclusive link in the description of this video, you will get a 20% trading fee rebate for life. And don't forget, if BingX isn't available in your region, don't worry. I've listed more exchanges in the description down below. All of them come with lifetime rebate deals, so check those out if you're trading actively. Okay, so what do you do with this information now? It's pretty simple, and I'm going to give you the strategy in 10 seconds. But before we count to 10, now is a good time to hit that like and subscribe if you haven't already. Okay, let's go. The strategy is very simple. Whatever coin you have your eye on or you're hearing about from your favorite influencers on YouTube, simply add them to a TradingView watch list. Now, the next step, once you've done that, is to make sure that you're on the daily time frame and simply mark a box around those dates. So the date started from November 4th and it ran until December 8th. Now, the next step, once you've marked that, is to then just zoom out and see what happened after this date. Most of the coins that you're charting right now are going to have found their support because most of them would have had a move up over this weekend. So find where that last support was and just make sure that it created a higher low in comparison to where that initial mini alt season started back in November. Now, if the coin made a higher low after this period of time right here, then it's a strong coin. If it made a lower low, it's weak and potentially could even be a paid shill if you heard about it online. Stay away. I've already shown you that these didn't make the biggest gains anyway. But if you insist on trading them, then here's my advice. For coins that ended up making a lower low after the last mini alt season, trade them only as short-term trades, providing your TA gives you the buy signal you're looking for. But for the love of no more mistake making this cycle, don't bag hold weak coins. Take a look at this. Prior mini alt seasons recently have lasted anywhere from 3 to 6 weeks. This one that we've been using as the example for this video lasted 32 days. Prior to that, we had a 50-day run, and prior to that, we had a 101-day run. So that's your window to make money on alts. And until that changes, your best bet is to short-term trade them and take profits when you sense weakness somewhere between the 3 to 6 week mark. Now, you might be wondering, well, why aren't alts taking off any longer than that? And the answer is simple. Most runs this cycle have not been spot driven runs. We know there's been a liquidity issue this cycle, and as a result, most traders have chosen leverage plays over spot plays. And leverage plays tend to not get held as long as they're either closed early due to racking up too many fees or the position gets liquidated. And that means we have to figure out if that is what's happening now. So let's go take a look at Coinalyze. What I'm showing you here is a combination of a few different things that I'm going to explain to you, but it's basically giving me a heads up on where the momentum is coming from. So on the top, we have the Bitcoin price action. I'm interested in what has happened since we broke out of the 75K region. The one below it, this line here, is coin margin contracts. So it's people who use their actual coin as the collateral for futures trades. I mention this a lot on this channel because it's how I personally trade in a bull market. I use my Bitcoin as collateral to make more Bitcoin, as opposed to using a stable coin where when I take profit, all I have is a stable coin. In a bull market, I don't want a stable coin. So what I can see with this one is that from 75K, we did start a slow uptrend, but once we got here to around 97K, that has been slowing down. So that means that it's more likely, because we have this this divergence between price and the CVD, it's more likely that coin margin positions are actually closing now. So they're taking their profit. The next one is stable coin margin contracts. So like I said to you earlier, this is people who take futures positions or leverage positions using USDT or USDC as the collateral, which is the most common way to trade futures anyway. But we can see that this one is in a steady uptrend. It's the most common way to trade futures. So it does matter a little bit more than coin margin futures. Probably really only quite highly successful traders trade coin margin. But the average trader, when they want to trade using leverage, they will trade stable coin. So this one's important and we can see it's in a steady uptrend. Now where the red flag comes is in the next one. The next one is the spot CVD. And what we want to see if we're going to have a sustained bull market or a really nice healthy uptrend is we want to see that the uptrend is supported by spot buyers, because generally if you are a long-term investor, you're buying spot, you're not opening your positions in futures. So we want to see the investors step in. And what we're seeing right now is actually that is coming down. So we've got the price rising, but the spot CVD for Bitcoin specifically is declining, whilst we also have the open interest rising, which is the last one on this chart. And that tells us that this move is currently futures driven, which means it does come to an end eventually when we start to see the funding rates get too high, and we also might see way too much leverage in the market, very high levels of liquidations, something like that. That is going to be our final signal that we're topping out. Now there is one other reason why we might be seeing the spot not rising for Bitcoin, and that could be that a lot of people are thinking alt season is coming, so that money is actually shifting to investing in alt over Bitcoin. And then if that's what's happening, that doesn't mean that we're topping out. It would actually be a good sign for alt seasons. So I'm going to use Ethereum to see if we can find any truth to that theory, because Ethereum has done pretty well this weekend. And when I go through the exact same thing, what I can see here is that there has been a spike in the coin margin. There has been a spike in USDT margin, but luckily there is also a spike in the spot. So it is possible that the reason people aren't buying Bitcoin spot right now is because they're rotating into alts. Now the only risk we have with that is that this could be temporary. So what we need to see next when we have a look at really any of your altcoin charts that have taken off over this weekend is that the initial move now gets proved, and it gets proved with a higher low. So again, using Ethereum as the example, on the daily time frame we broke the 50 EMA with strength. That's an amazing sign, and it ran to the 200 EMA. If you understand the TBD system and how we trade over here on this channel, those are the first two early signs of a trend change that we look for. A high volume break of the 50 EMA and then an attempt to the 200 EMA. Once we get that, we're looking for price to retest the 50 EMA. It can do that by consolidating and holding the 50 EMA before it takes its next leg to the upside, or it can do that with a pullback that again then holds somewhere around the 50 EMA as support. If we get this and everything else that I've spoken about on this video remains intact, meaning we have spot buying, we have Bitcoin dominance continuing to drop, we have the totals continuing to rise, we have the stablecoin dominances continuing to drop, and we maintain structure with a higher low, that could be your best buy the dip opportunity. And then week by week, you just simply assess whatever you've decided to buy for signs of weakness to know that this isn't going to run on for too many months, and it's going to be just another short-term mini alt season, which you can easily exploit as long as you're aware that that's all it is. And that's exactly what our TTC community have been doing all week. We've had some amazing trades shared by our pro trader team and also by our members. Here's a quick look at some of the wins that we've had this week in Discord. This is one of our pro traders, Cody, who did an Ethereum setup right here for our members, and this was the result. This trade right here was taken only on 7x leverage, so nothing too crazy, but this was the W formation where he signaled it, had the breakout, had the retest here for another second chance entry, and it absolutely took off. We've also had many of our members taking amazing trades. We can see here Sol 752%, Cardano only on a 3x leverage 67%, Bitcoin 114, Ethereum 598, holding this forever. We would not let him do that. Bitcoin again 392, Tao 151. This one was huge. 𝗶𝗶𝗃 1100. So the community are absolutely smashing it. And if you want to learn our strategy and trade alongside us, check out the link below this video to join TTC and be part of a serious trading community. All right, now let's take a look at the news events this week, because we want to make sure that they don't screw us over with our beautiful uptrend, but some of them could also provide the pullback that we're wanting. So it's important to be aware of what is coming up this week. First up on Tuesday, we've got CPI data. Now this is inflation data, and you already know the market is extremely sensitive to anything that hints at rate cuts or rate hikes. If the CPI comes in hotter than expected, that could shake the market. Traders will start pricing in the idea that the Fed may need to keep rates higher for longer, which usually isn't great for risk assets like crypto. But if the CPI is cooler than expected, that could fuel bullish momentum and give this altcoin run even more legs. So Tuesday's a big one. Be careful trading around it. Then on Thursday, we have retail sales and unemployment claims. Retail sales gives us insight into consumer strength, and lately we've seen signs that the consumer is weakening. So if retail sales come in soft and jobless claims start to tick higher, that adds to the narrative that the economy is slowing, which again puts pressure on the Fed to ease up. That could be bullish for crypto long term, but keep in mind longer term, it also raises recession risks. Then on Friday, we've got consumer sentiment, which is a sentiment indicator, essentially how the average person feels about the economy. This can impact spending, which feeds back into growth and inflation. So if this drops sharply, it could spook the markets, especially if it confirms a slowdown narrative we might start to see forming earlier in the week. And one more wild card that we have this week is the ongoing Trump-China tariff situation. At the time that I'm filming this, there's no concrete announcement yet, but talks are apparently underway. If any information about this drops whilst the volume is low, for example, before the actual market opens, it could cause a fast, unexpected move in either direction. This is especially dangerous in crypto because low volume makes it easier to push price and trigger liquidations. And of course, prior to Sunday 5 p.m. New York, crypto is the only market that's open. So if you're already in trades and you're in profit, this is the kind of information where you want to tighten your stops, you want to protect those wins, and you want to stay pretty nimble with your trades. The volatility could create amazing opportunities, but only if you're prepared and not overexposed.